Hey traders, welcome to Charts and Coffee. Happy Friday, everybody. We've got a lot going on the economic calendar today. I think everyone has been waiting, and we think about market participants and sort of this anxiousness into what is Powell going to say. That is going to kick off at 10 a.m. today. We do have some other speakers preempting Powell. I believe we had a 9 a.m. speaker, but it really doesn't matter. Powell speaking at 10. That's going to be the tone that's probably set for the remainder of definitely today, but going into next week as we get GDP numbers and PCE. So remember, if you think about the order in which what's about to happen, we hear from Powell, GDP next Wednesday, PCE next Friday, and I think it's been one of the B's. Bostic, there you go. Thanks, Bot. It's been Bostic speaking. So Atlanta Fed Raphael Bostic. Overall, though, we're seeing a lot of movement higher. So you might say, Rog, what do we do with all these calendar events? Are we trading Powell? No, we're just acknowledging that Powell is a major impacting event, and we'll see how the market responds. Now, the market could be S&P, treasuries, currencies. The overall focus is going to be whether or not the Federal Reserve is really verbally committed to what we all know has to happen in September, which is at least a quarter point cut. Some kind of cut is coming. It's less and less likely that it's going to be a half point cut. It's really more likely to be a quarter. But remember, this will be the first quarter point cut in what is anticipated to be a fairly prolonged and gradual quarter point per meeting. Say that 3 times fast. Quarter point per meeting cycle that could take us really into April to June of next year. So we're going to be probably around 3.5% on the Fed funds rate from the current 5.25% to 5.5%. So it's going to be a prolonged cut of significance. Keep in mind that just because the first cut happened doesn't mean the equity markets have to sell off. I know there is a seasonal tendency for August, September, choppy August, very weak September. All those things could happen, but remember, seasonals are not setups. They're just tendencies. So we want to keep in mind that in the background, yes, this tendency is there, but we don't take that. We don't take that to the bank, right? So ultimately, that's where we sit. Again, probably the most interesting thing about this month, let's put the carry unwind aside, is the fact that equities have basically taken back the sell-off. And I think the movement into the 19th was pretty important, because on the 19th, that was the first time the S&P got above basically the scene of the crime sell-off that began on the 1st of August and really started to gain steam on that non-farm payroll Friday as the US dollar dropped, yen continued to strengthen. And if you're wondering what's going on with the yen now, no one's talking about the yen right now. What's going on with that Japanese yen US dollar relationship? Just moving sideways now. Right? We had the big rally in the yen, a little bit of dollar weakness, and now things have just found its new normal, right? And that's really all that the market needs to do. It doesn't mean that yen has to come back down to 0.063 or 0.0065. It just means that nothing more is happening. We had the big adjustment, equity markets responded, and now we're just finding this new normal just below 0.007. And by the way, that's the yen versus US dollar rate when you look at the JY futures, right? You don't have to look at spot. You can, probably the better way to do it. But if you want to take a look at JY, that's what it looks like. All right. In the meantime, what else do we have here? Looking at a few positions that we have coming into today in the Sector Secrets Master, we are long gold via GLD calls. We are also long Coca-Cola via calls as well. So gold, we were able to scale out of, but we still have half the position open. And Coke, we built that position the last 40, 45 minutes of the day. Coke traded down into a range that made a lot of sense to take advantage of. So we did, and we're long Coke, which has been one of the best performing staples of the staple sector, the XLP sector, one of the best performing stocks, period. And, when we look at things like Coke and GLD, and I want to talk to those of you that are at the moment saying, okay, Rob, this sounds all well and good, but I have a smaller account, I have a medium-sized account or a smaller account. Can I take advantage of trades like this? There are 2 things that I would really recommend small account traders do. 1, use a cash account. because pattern day trading rules won't apply to a cash account when you're trading long calls and long puts. That brings me to the second step. You don't have to be in spreads. Could you eventually say, Ron, but I'd like to be able to do spreads? Great. But let's think about what any option, multi-leg option strategy is. It can only be some combination of buying or selling calls and buying or selling puts. That's it. So if we don't work on the most foundational part of that, which is the timing on long calls and the timing on long puts, anything we do after that is going to have possibly poor timing. So let's work on the foundation concept. And then the cool thing is, a lot of folks who get used to cash account, long call, long put say, Rob, I really don't need to do anything else. This works. And the great part is, and this is why I said small account folks, think about this for a moment. The GLD, I'll tell you right now, because I have my handy dandy little planner where I keep everything. The GLD cost us $3.05, $305 per contract. The Coke entry cost $2.08 or $208 per contract. These are not $3,000 contracts. These are not even $1,000 contracts. So what I try to ask traders to imagine is, if you have a smaller account, how many comfortably $200 or $300 calls can you buy with the hope to make? For example, with the GLD trade, we scaled out once at 380. Okay, I'll take 75 cents off the table. It's not ultimately what I want to see. I think there's a lot more upside, but it's a great place. And this is so important. And I got to use some technobabble. A lot of folks want that asymmetrical. Who's heard of that? Asymmetrical risk. In other words, a very small amount of risk for an outsized reward. That's possible, but you start off with smaller risk and you make certain adjustments as the trade goes in your favor to be able to benefit from asymmetric risk. But a lot of times when traders are risking a very small amount to make a big profit, what happens is you get stopped out because the stop is so tight and the market keeps going on without you. And that's one of the problems with wanting to force a 5-to-1, 10-to-1, or whatever risk reward ratio on the trade, when in reality, when the trade starts off, it's much more symmetrical. Right? It's much more 1-to-1. All right. So that's one. Those are a couple of things that smaller account traders can think about, because the one thing we all want, whether it's a small account or it's a Godzilla sized account, is account growth. So you might say, well, Rog, I don't trade a small account, right? Neither do I, but I did once upon a time. And the same thing I did with my $1,200 account when I started as a kid trading is the same thing I've done with a $1.2 million account, right? The scale is that I can afford to trade more things and sometimes more expensive things, but I can also scale in the same way that I did when I was trading $1,200 in an account. And that's sometimes lost, as if we need to reinvent ourselves when the account size goes from 4 figures to 5 figures to 6 figures to 7 figures, whatever it is. And I really want traders to be able to remember account growth is possible. It's just a little bit different, a choice in terms of what trades are reasonable when you're a smaller account. So it's just a matter of discernment in the very early stages as you're building that grub stake. All right. Anyway, it's a couple things, because to me, Coke and GLD are great examples of really affordable, scalable opportunities. Now, what do I mean by scalable? Maybe that doesn't translate. I have a larger account. I didn't trade 2 Coke contracts, right? At $208. Some of our members say, Rob, I can trade 5. Others are trading 25. Right? If it's a liquid enough count, some people might trade 50 of them, right? So that's where your scalability comes into play. And these are really basic concepts that for whatever reason aren't taught early in the career. So that leads traders to blow up accounts, risk too much, right? And then think that trading is not for them, when in reality, I truly believe you can learn how to play this game. It's just working some of the basic percentages and some of the basic arithmetic of, can I do this and how big should it be and how much should I risk, right? Anyway, so those are things that I hope that you'll think about, saying, yeah, maybe my strategy is fine, but I'm not position sizing and placing my stop loss in the right way to fully capitalize on it, right? Okay, so let's see. Yep, Jackson Hole is today. Good morning, Mark. Jackson Hole is today. Again, the main thing about Jackson Hole is not, it's been going on since yesterday. We've been talking about it all week. Today at 10 a.m., we hear from Powell, and that's the hot zone we need to keep an eye on. All right. So let's see what we've got here. And scroll, scroll, scroll. All right. Good morning. Hey there, practice. How do I look at the news at about 818,000 adjustment? Oh, so what do you do with the data? Nothing. I would not in any way place a trade based on the data. So, for example, non-farm, GDP, initial claims, whatever it may be. I'm not looking at that number, practice. All I'm looking at is the time it's being released and the reaction. So I'm counterpunching, right? The number itself is not going to tell me. So if I see 818,000 adjustment of jobs, right? Thanks for the number. I'll tell you, I didn't even know. You don't need to know. And I know that might sound like heresy, but what's the impact on my day trading? The impact on my day trading is basically, do I have a setup in gold or coke? And is there an event that could increase volatility? And that's really it. I'm not setting up any trade because a certain hot zone printed a certain number or had a revision of another number, right? Not in any way. I look at the trends. And remember this, I think that this is true. And I read this, or one of my mentors told me this decades ago. A chartist, not even a technician, a chartist, someone just like us, right? We're looking at this map, this thing called a chart. A chartist believes that all the news out there, the news we know and the news we don't know, right, is built into price. So that's the cool thing about price and volume. It's really taking all the things we do and don't know. We couldn't possibly know everything about what's moving around market sentiment, individual to every symbol out there, right? But we know price is somehow discounting. It's already baked it in. It's already reacted to it. So I trust price, right? And then I add on other layers like volume and volatility and time, right? What time are these events happening? So I hope that kind of helps. All right. So next up is question wise. And thank you, Practice, for that question, because I think a lot of traders think because they parade so many economists and analysts across television who talk about all the nuance of numbers. I don't know of any trader who said, oh my gosh, this number printed this, therefore this is the trade I'm going to put on. No, I think they're all looking for a reaction. And then once that reaction's out there, either it closes the distance to a target or closes the distance to an entry or stops us out. And that's really trading, right? And I think a lot of times we all can get a little too, especially if we keep financial media on, we can start to confuse what trading really is. We're taking advantage of price, right? We're not economists. We're not looking at a 1 year time horizon. I'm going to be day trading this morning, right? And then we're going to be doing some swing trades. These trades that I have on, their life cycle is to basically September 20 when the option expires. So where we are in November, that's for a whole other set of trades. Where we are going to be a year from now, that's not really pertinent to the time frame that we're trading. And usually for most traders, if you think about it, you're trading probably an hourly or a daily time frame, maybe, or if you're a day trader, 5 or a 2-minute time frame. And your time horizon, how long you think you project that you could be in the trade, it's usually less than 10 days, right? So if someone's talking about what could happen, if it's beyond 10 days from now, it's probably not pertinent to us at all. Yeah. All right. Question here is CRST. Could I chart that? Sure. I don't know what it is. CRST. Doesn't seem to want to come up. What is the Panthers? I don't know what that is. CRST, I'll keep an eye on. It just doesn't want to come up on toss for whatever reason. So if we're taking a look, by the way, gang, at S&P, NAS, Dow, and Russell this morning, all of them are above the previous session close. The NASDAQ the most. It's up by 0.82% from yesterday's 19,612 and a quarter previous session close, but all the broader averages are above. And by the way, the Dow, the YM, is in an uptrend this morning. So you might say, Rog, what do you do with that? Ultimately, if you're looking at the Dow, remember, if the Dow is moving higher, keep an eye on financials, keep an eye on healthcare. All right, keep an eye on financials, keep an eye on healthcare. All right, what was the symbol you want to take a look at? CRSP. Okay, well, I can definitely type that up. Okay, CRISPR. I read a really cool book that Walter Isaacson wrote. I think it was called The Code Breakers. I don't know if you ever read that, Panthers Are King. Really interesting if you're into some of that CRISPR technology. So what about the chart? I'll leave it alone. It's a weak chart. It's in a downtrend. It's below all the key levels that I would consider that would make it appealing to the long side. You might want to pull up some volume on a daily time frame and look at where the point of control and some volume ledges might be. But I can't look to the upside on this one at the moment, on the daily nor the weekly. So if you're looking shorter term, maybe something on the hourly. But would this be a stock that even in the short term or long term I can buy? No, not yet. Although if you want to keep an eye on a level, I would say keep an eye on whether or not we can build volume and support around 44.80 to basically 40.80. I would look for that zone. If this is going to find some support and if it's going to shake off the downtrend, you can keep an eye on that level. All right, next question is what's going on with gold? I'm long. So money, I'm long. So that tells you everything you need to know about what I think about gold. We are already long gold via GLD calls. We've already scaled out of our calls, meaning, you buy a certain number of these options. Like I mentioned earlier, they cost $305 each. That's all. And as we move to the first target, we scaled out, we moved to break even. And now we're looking for the next leg up, which looks like we're probably going to get here at the open. So I'm not going to buy up here. Please know that. This is so important. Let me zoom in and show you what we did, and it'll give you an idea of how I time my entries. And this is what we recommended to the Sector Secrets Mastery folks by way of an alert. This zone, right? That's where we get in. Here, this is where I'm looking at taking profit. I'm not looking at entering as we move higher, right? As we moved lower into the support zone yesterday, right? This right here, that's where we get in. That's where we bought the calls, and we've already paid ourselves once, and we'll continue to look for upside as what I would like to see with Powell as gold continues higher. All right. Energy. It's a great question. I would love to get busier on XLE, OIH, XOP, Pat. I can't quite yet. No. Of all the things that I could do, it's really just not ready for prime time for me. It's still very heavy. The follow through has been not good. So I've been leaving things like, even though Exxon is the best looking stock, I agree, Pat. Even though the Exxon is the best looking stock, I'm leaving it alone. It's really just a matter of where do you allocate not just your capital for trades, but your attention. So I'm just leaving this on the back burner until I can get some clarity out of crude oil. If not, it remains very heavy. And I think there's other better places for us to look for trades like Coke, like gold. I don't play earnings, Dave. I am categorically against making a binary bet on earnings. However, I respect the impact earnings could have. So when something like CRWD, what I would say is I'd wait till after earnings. It's not a stock that would tempt me anyways, based on what I see here on the daily time frame. We're still below the anchored VWAP. We're still below the equator, which is the white dots. It could try to bounce. It's at least neutral. But I would wait till after earnings, see where the dust settles, and then see if crowd can get back above, say, 300 to 306, or if it's going to stay weak, in which case, at least now, after earnings, I've got some directional bias. And I think a really good example of why it makes sense to wait would be something like Walmart. When you look at Walmart, earnings were back in here, right, on the 15th, and it really was a choppy, meandering, right, market until we got the clarity boom of the gap in earnings. So that's what I mean. Sometimes it makes sense to say, all right, markets are doing whatever they're doing, like Walmart in this case. Earnings gave us clarity. So I don't want to bet on earnings. I want to use earnings to see if it reveals a little bit more about what ultimately the follow through is going to be with that symbol. All right, gang, as always, thank you so much for being here for Charts and Coffee. I'll be back on Sunday at 6 p.m. Eastern for the top tier outlook as we prepare for what should be a pretty busy week and the last trading week of August. All right, gang, be good to each other. I'll talk with you soon.